Hello to everyone. Today I am here with the Central Bank of Pakistan Monetary Policy decision on policy rate as on June 10, 2024. If you are interested to have update videos on banking and finance related topics, please do subscribe my channel. Factors influence the Central Bank of Pakistan's, that is State Bank of Pakistan policy rate decision. Monetary Policy Committee observed the following outlook. Significant decline in the inflation since February was broadly in line with the expectation. The May outturn was better than anticipated earlier. Inflationary pressures are also subsiding amidst tight monetary policy stance supported by the fiscal consolidation. Continued moderation in core inflation and ease in the inflation expectation of both consumers and businesses in the latest survey. On the other hand, it has viewed some upside risk to the near-term inflation outlook associated with the upcoming budgetary measures and uncertainty regarding the future energy prices adjustment. So these factors may increase the inflation within the country, and we are expecting or we are considering as risk. Key factors since its last meeting. Real GDP growth remained moderate at 2.4% in the financial year 24, as per the provisional data, with the subdued recovery in industry and the services partially offsetting the strong growth in the agriculture. Reduction in the current account deficit has helped improve foreign exchange reserve to around $9 billion despite large debt repayment and the weak official inflow. The government has also approached the IMF for an external fund facility program which is likely to be unlocked financial inflow that will help in further build up of the foreign exchange buffer. International oil prices has declined, whereas the non-oil commodity prices has continued to inch up. So here on one side, there are chances of the decrease in of the oil prices, but on the other side, non-oil commodity prices has continued to inch up. Real sector latest estimate indicate the real GDP growth at 2.1% in the third quarter of financial year 2024 against a construction of 1.1% in the same quarter last year. While the agriculture was already showing the strong growth, industry also witnessing positive growth in third quarter, and also initial growth estimate for the both quarter 1 and quarter 2 for the financial year 24 were revised upward. Taking into account the development in the first 9 months, financial year 24 growth is provisionally estimated by BPS at 2.4% against the construction of 0.2% in the financial year 2023. Almost two-thirds of this recovery was explained by the improvement in the agriculture sector. So these are the signs related to the agriculture sector, but these are information is provided by the central bank. On the other side, we have also scanned related to the wheat. Let's see. These developments are in line with the Monetary Policy Committee earlier expectation. For financial year 25, the Monetary Policy Committee expect economic growth to remain moderate. This assessment take into the account the impact of the expected moderation in agriculture output and ongoing stabilization policies. External sector, the current account posted a surplus for the third consecutive month in April on the back of the robust growth in remittances and exports, which more than offset the uptick in the imports. During July to April for the financial year 24, the current account deficit narrowed significantly to $202 million. In the same period, export grew by 10.6%. It's very positive and mainly driven by increasing the quantum of the rice and HVA textile exports. Conversely, import decreased by 5.3% during the same period due to the lower international commodity prices, particularly you can say the oil, better domestic agriculture output, and moderate economic activity. Worker remittances also remain robust in the recent month, reaching an all-time high of $3.2 billion in May 2024. The resultant lower current account deficit, along with the improved FDI and the reimbursement and the disbursement of SBA tranche in April, has facilitated ongoing light debt repayment and supported the State Bank of Pakistan foreign exchange reserve. Going forward, the committee stressed that timely moderation of the financial inflow is essential to meet the external financing requirement and further strengthen the foreign exchange buffer for the country for effective response to any external shock and support sustainable economic growth. Fiscal sectors. Fiscal indicate continues to show improvement during July to March for the financial year 24. The primary surplus increased to 1.5% of GDP, while the overall deficit remained almost at last year's level. A large part of this improvement reflects the impact of increase in the tax, PDL rates, higher State Bank of Pakistan profit, and lower energy sector subsidy rate. Considering there has been limited progress in addressing the structural weaknesses to broaden the tax base and initiate energy sector reform, financial year 25 budgetary measures are also expected to be largely rate-based. Committee emphasized that the fiscal consolidation through the bordering the tax base and the reforming the loss-making public sector enterprises would help achieve fiscal sustainability on a more durable basis. This is also imperative to keep inflation on a downward trajectory and contain the external account pressures. Inflation outlook headline. Inflation deteriorated to 11.8% in May 2024 from 17.3% in April. Besides the continued tight monetary policy sustained, this sharp reduction was also driven by a sizable decline in the price of the wheat flour, and some other major food items, along with the downward adjustment in administrative energy prices. Core inflation also declared to 14.2% from 15.6%. The committee noted that the near-term inflation outlook is susceptible to risk emanating uh, from the financial year 25 by streamer years and future adjustment in the electricity and gas tariffs. Monetary Policy Committee foresees the risk of the inflation to rise significant in July 24 from the current level before trending down gradually during the financial year 25. Um, The Monetary Policy Committee also observed that the sharp wheat prices reduction has historically proven to be temporary. Committee assesses that the current monetary policy sustain remain appropriate to ensure that the inflation stay on a downward trajectory. In the meeting held on today, June 10, 2024, in which the committee decided to reduce the policy rate by 150 base points to 20.5% based on the factors we have discussed. Thank you very much. See you with the upcoming monetary policy very soon. And again, if you are interested to have update videos on banking and finance related topics, please do subscribe my channel.